Blanket mortgage, a mortgage that covers multiple properties under a single loan, often used by real estate investors or developers. Reverse annuity mortgage, a mortgage in which the lender makes payments to the homeowner based on the equity in their home, with the loan paid back when the home is sold or the homeowner passes away. Purchase money mortgage, a mortgage that is provided by the seller of the property, typically used when the buyer cannot obtain financing from a traditional lender. Non-conforming mortgage, a mortgage that does not meet the criteria for a conventional mortgage, often used for borrowers with poor credit or unique financial circumstances. Participation mortgage, a mortgage in which the lender receives a portion of the income generated by the property, in addition to the interest on the loan. Option R mortgage, a mortgage in which the borrower can choose to pay a different amount each month, with the option to pay only the interest, make a minimum payment, or make a payment that includes both principal and interest. Subprime mortgage, a mortgage that is offered to borrowers with poor credit, often with higher interest rates and less favorable terms. Green mortgage, a mortgage that rewards borrowers for purchasing energy-efficient homes or making green improvements to their existing properties. Equity loan mortgage, a mortgage that allows the borrower to borrow against the equity in their home, using the property as collateral. Offset mortgage, a mortgage that allows the borrower to link their savings or current account to their mortgage, reducing the amount of interest paid on the loan. Islamic mortgage, a mortgage that complies with Islamic finance principles, such as avoiding interest payments and adhering to Sharia law. Peer-to-peer mortgage, a mortgage in which the loan is funded by a group of individual investors, rather than a traditional lender. Family-funded mortgage, a mortgage that is provided by a family member, typically with more flexible terms than a traditional mortgage. No documentation mortgage, a mortgage that does not require the borrower to provide documentation of their income or assets, often used by self-employed borrowers or those with unconventional income sources. Seasonal payment mortgage, a mortgage that allows the borrower to make larger payments during peak earning seasons and smaller payments during slower seasons. Rent-to-own mortgage, a mortgage that allows the borrower to rent a property with the option to purchase it at a later date, with a portion of the rent payments applied towards the purchase price. Hard money mortgage, a mortgage that is provided by private lenders, often with higher interest rates and shorter repayment terms than traditional mortgages. Hybrid mortgage, a mortgage that combines elements of multiple mortgage types, such as a fixed-rate mortgage with an adjustable-rate mortgage. Jumbo mortgage, a mortgage that exceeds the maximum loan limit set by Fannie Mae and Freddie Mac, often used to finance luxury homes or properties in high-cost areas. Interest-only mortgage, a mortgage in which the borrower pays only the interest on the loan for a set period of time, with the option to begin paying off the principal at a later date. Payment option R mortgage, a mortgage that allows the borrower to choose from multiple payment options each month, with the option to pay only the minimum payment, a fixed payment, or a payment that includes both principal and interest. Graduated payment arm mortgage, a mortgage that starts with lower payments in the early years of the loan, with payments increasing over time as the borrower's income increases, and with an adjustable interest rate. Adjustable rate mortgage, a mortgage with an interest rate that can change over time, often with an initial fixed rate period followed by a period of adjustable interest rates. Fixed rate mortgage, a mortgage with an interest rate that remains the same for the entire term of the loan, typically 15 to 30 years. Balloon mortgage, a mortgage with a large payment due at the end of the loan term, often used for short-term financing or for borrowers who expect to have a large sum of money available at the end of the loan. FHA loan, a mortgage insured by the Federal Housing Administration, often used by first-time homebuyers or those with limited income or credit history. VA loan, a mortgage guaranteed by the Department of Veterans Affairs, available to eligible veterans and their spouses, often with lower interest rates and more favorable terms than traditional mortgages. USDA loan, a mortgage guaranteed by the U.S. Department of Agriculture, available to eligible borrowers in rural areas, often with lower interest rates and more favorable terms than traditional mortgages.